Welcome to TradeTheMBI.com. This is John. This report is for the 26th, and well, we got pretty much exactly what we were looking for. We started off at the pop up a little bit, and then as the weakness was going through, I was suggesting that the 2485 level would be a likely retrace if it couldn't reach the intraday highs that we were looking at from the early morning. And look at the low; they hit it exactly to the even number 2485 for the low, and then as soon as that happened, we traded across a little bit. We'll see it on the 5K, and then it just shot up right back up to it actually went green and then faded off a little bit. We're still straight down climb though here with the shakeout. The question will be whether or not, now we've already seen it right here starting for the day negative. That would be the first return to negative since the little breakout move, and that's likely to backfill in, but we're starting to get oversold. The problem with this is you don't have a reset of the orange coming back down underneath here, and you've already got the steel short-term buyers having held it up as much as possible. You have to see a turnaround in the midterm buyers green and as well as long-term, and it's just starting to flatten out. But you can see below the red line with the extreme histogram. There, so you can see it. So we're getting a little more of that intraday move, which was good. That's what we were talking about, increase in volatility, particularly heading into end of the month, but still very weak looking chart. Likewise here in Q, it's flattened out, so a little bit of support, but again, this is an easy one. It's like you've got the ABM green right there, 59.20. Above that, certainly safe to be long, but below it, I think you either have to be cautiously short this, and you can see this is a pretty decent run of negativity, and I think some of that's probably related to the dismal Apple performance. Then again, I don't know what anything you would get from that iPhone 8 versus the 7 Plus. Not a whole lot of difference, and I think that this is starting to wear on people, this constant new product just for the sake of a new product without anything innovative. The euro fading a little bit too is also going to have a little bit of weakness. It's not enough to make a difference because you're still well outside the range. This still supports strong exports for the U.S. Until you get back down below 110 range. This is actually a net positive for growth for America, at least. And it's still within a short configuration as well for now, but it hasn't really faded much. The interesting thing is surprising rise again in treasuries. Is a strange behavior, which lets you know that obviously there's a manipulation, because how are you going to have that and then at the same time having oil skyrocket is an indication that there is a bifurcation in what's going on in markets versus controlled aspects, because as oil rises, you're going to have inflationary concerns. This is what we've been looking for as an indication that things are starting to move in the direction of real growth. And obviously, if the hurricanes didn't interrupt production and supply as much as might have been thought, that is going to create a glut. But if the glut is being used up, that is an indication that you have higher outputs. That's big positives. And gold spiking on the whole. North Korea says that the U.S. declared war and that kind of emotional stuff. But needless to say, we finally see a turnaround in the readings for gold. We'd seen that they got to the oversold. We were waiting for this configuration right here, which took a little while. And it's not likely to last too long. We're likely going to be revisiting this right back to retest the low. So probably see a little weakness come back, fill it in, and that will give the full buy signal, in which case then you have your opportunity to re-enter. So it happened a little quicker than we expected. Let me shrink this just a fraction. There we go. So we started up with the pre-market highs. Now when you start coming off those pre-market highs and come back to your lows, the expectation is that you're going to get at least back up to those at some point during the day. Oftentimes you get the first run doesn't work, and then the second one wave makes its attempt right back up there. Now if you don't get there, which is what we were talking about, particularly after the short setup came here, we weren't getting resets dipping below until we got one that happened right there. Right at the peak the setup, and as soon as it did it, the steel crossed below, and that led to the beginning of the downcline. And even as it tried to get up, when it got to this point where it crossed over, you ended up with such a horrible shakeout that there was no recovery on it, and you were stuck in the zone here. And then you got a buy signal that took place right over here, and that led to a short wave which retested its lows to cover right here. And from that point, it was just a slow build, and it's just one of those where you keep getting little buy signals that come through, and then all the way until it does its little peak move. And so got most of the way back, but not all the way. So that's still problematic because the 2500 now is significant resistance going forward. So what was the draw now becomes the ceiling, and unless you get back above it, you're going to have problems. So that's the state of affairs at this particular point. As always, we'll keep pointing out the action as it develops. Right now, still within a little bit of a short signal here in the 5K pre-market, but definitely going to be looking at that 2500 and whether or not you break above it, because the next move above it, though, should be a bit more sustained. But until you get there, you got to be a little cautious. As always, though, trade well. We'll talk to them later.